All right. Hello, everyone. Or should I say, those of you who are going to join us tonight? I am going to, let me see. Let me make sure I'm live over on YouTube. Yep, there's an ad. So I am live on YouTube. Okay. Yeah. So I am going to make an announcement over on my science channel in case anyone wants to come over and partake in what me and Alonzo are going to talk about tonight. I'm tempted to make the announcement over on my sports channel as well, though I don't think. I wonder if if anyone over there will come over there because the crowds on YouTube are different. I have 4 channels. There's some overlap. But in general, the crowds are different. So guys, just bear with me. I'm going to share this over on my science channel and then maybe on my sports channel in case anyone is interested. Hey, thank you for those of you who are in here. Please hit that like button. Let's see. What's going on, Sheep? I see we have Just Being Jazzy's podcast. Hey, Sheep, we here. Thank you for being here. Okay. So skip that. Give my own video a like. Let's see. At Alonzo Hall. Just tagged Alonzo. Okay, so I just shared it over there. You know what? I will share this to the sports channel crowd. Even sports fans might want to learn about life insurance. I'll do this, everyone. I promise I will get this going. Okay. Skip the ad. Okay. All right. Just give me a few more minutes. Everyone's having a good Tuesday thus far. I hope your weeks are off to a good start. Okay, I just shared that over. I just shared that over on my science. I'm sorry, on my science and my sports channels. I never shared anything. I've never shared anything from this channel over to my sports channel. I usually share the sports channel over here, but that's a different crowd. So someone over there might want to hear this. Sports fans need life insurance too. Okay, guys, I'm going to play the intro and then I will start this up so I can bring Alonzo up and we can learn something. So I'm going to play the intro and then I'll see you on the other side. All right. Hello, everyone. Welcome back to my channel. My name is Dr. Anwar Youssef Dunbar, and this is Big Discussions 76, my original channel. First of all, please like the stream or the video if you're watching it on the playback. Please share and please subscribe. Those are free. All of those are free. The super chat is live. And if you want to make a donation to me or my guests tonight, my Cash App and PayPal are here if you see fit. Okay, so everyone, I'm gonna all the advertising for my newsletter and for my book, I'm gonna do that at the end for those of you who are still hanging on. I'm not gonna hold everything up for that. So tonight we're going to talk about life insurance. This is going to be a educational discussion. Of course, most of the discussions over here are educational now, and if you get some kind of entertainment out of it, that's good. But I did rebrand, so now this channel is going to do more education-related topics of all kinds. As I'm an aspiring author, more of an emphasis on reading and writing. I've done some voiceovers. I've read some passages from books. And once again, as Stephen King and Gerald Early said, in order to become a writer, you have to read a lot and you have to write a lot. So that's the pathway in which I'm embarking on. And also interviewing interesting and notable guests with the hope of creating evergreen content. Shout out to Sheed, who's there in the chat. When I say evergreen, I mean being able to leave it up. And also, if a future employer finds me here, they can look at that and not say, oh my God, why are they talking about that, or whatever. Image is very, very important. And yeah, I've learned that the hard way. Image is important. What you put online is important. And you need to be able to stick by it. And yeah, you forget what's up there months later. So evergreen content. Shout out to Sheet. Okay, so today we're going to talk about insurance, and I'm going to tell you before I bring my guest up why I decided to do this and why I think this is important, because it's very, very important. Let's well, in the spirit of becoming in the spirit of being an aspiring author and writer, let's have some story time. So when did I start thinking about insurance, and when did insurance start to enter my gray matter? How did that all happen? Well, actually, it was about 20 years ago. Most of you know, and if you don't know, I attended the University of Michigan for graduate school. And it was here. There's the University of Michigan medical campus. I spent about 6 years there working on a research project. And one night, I was going to the grocery store. For those of you who have been to Michigan or who are from Michigan, you know of the chain Meijer, which is like a local Walmart. They sell food and items of all kinds: athletic gear, sports gear, groceries, tents, auto supplies, everything. So I was driving to Meijer and I was searching AM radio. And those of you who have been subbed to this channel for a while know that I became a fan of the Bruce Williams show. I haven't talked about him recently. I think he must have passed away at this point. But Bruce Williams had a show every night on WAAM 1600 in Ann Arbor. Okay. And the Bruce Williams show was an everything show. Bruce talked about politics. Okay. He talked about current events, what was happening in the world. I remember, I think when Columbine happened, I hadn't heard about it. And I called the show and he said, "What, you haven't heard of Columbine? What are you living in a bubble?" He literally did ask me that. But he talked about everything. People would call him about their personal problems. They'd call him about business ideas. They'd call Bruce when they'd call him about starting businesses, because he'd done pretty much everything. He was a radio talk show host, but he was knowledgeable literally on everything. And then sometimes they would get to talking about insurance and annuities. And that was the first time I had ever started to think about and conceive of life insurance, cash, term, whole life. I'm not saying I understood it at I'm not saying I understood it at that time, but that was the first time in my mid 20s that I started thinking about and conceiving of those things. And I also remember watching a lot of sporting events as a youth, seeing commercials for things like Prudential and Edward Jones. I think it's Edward Jones, Dean Witter, and not really knowing what those commercials were for, because in my family, we didn't talk about insurance. We didn't talk about that type of thing. So I didn't really know what that was. Okay. Now, so I was doing a purge in here. That's how I started thinking about insurance in my lifetime. I was doing a purge in here maybe about 2 weeks ago, and I found this. This is something my mentor gave me years ago. He knew that I was starting a blog, and he knew that I had interest in being a writer, and he knew that I had an interest in financial literacy. So he gave me this. This is an article from Ebony, and it's entitled "The 6 Biggest Money Mistakes Black People Make." Okay, this was written by Kimberly Seals Allers. Okay, so most of my audience right now, is Black, and I plan to expand it out with some of the guests that I'm going to have come on. But I flipped through this. It was a short read, and as you'll see, well, let's take a look at money mistake number 5. And actually, this piece is still online. It's still live and online. It's from years ago, from Ebony magazine. Well, let's take a look at what number 5 is. The 6 biggest money mistakes Black people make. This is from October 2013. A picture of a lovely lady right there. So I'm just going to run through these really quickly. I might make a voiceover based upon this, but I'm not going to read every detail right here. The mistake number one, not having a budget. Okay. Mistake number 2, loaning money to family and friends instead of saving or paying down debt. Money mistake number 3, living check to check and not having an emergency fund. Okay. Money mistake number 4, piling up debt on credit cards and not being aware of your credit score. Okay. Now here's number 5. When I read number 5, and I've had this in my stack of papers for the last 3, 4, 5 years. But when I read number 5, I said, okay, me and Alonzo have been talking about collaborating. I've got to get him on the channel now. Number 5, that's right, you guessed it, not having life insurance, a will, or long-term disability insurance. So mistake number 5, once again, is not having life insurance, a will, or long-term disability insurance. Okay. And then mistake number 6 is not saving for retirement. Okay. This was written about 9 years ago. I'm going to drop the link. Alonzo already, he already pulled it. Okay. The link is there. Yeah, the link is there. Okay. So in doing this stream, This is for educational. Oh, the aliens are here too. And the leader of the aliens is here too. Okay. Shout out to SMD. And so the question is, why would people break these rules? And I'm not doing this string to guilt or shame anyone that's doing this. But I think a big reason is there are a lot of people who don't know. There are a lot of people who don't know about insurance, why that's important, having an emergency fund, paying down debt. There are a lot of people who just don't know. Since LJ just showed up in the chat, I'm sure he'd make the argument that this is a part of psychological capitalism. But the bottom line is a lot of people just don't know. People are walking around not knowing or even not caring. So insurance. Let's zero in on insurance, and I want to bring Alonzo up because I feel like I'm talking a lot. People want to hear him. He's the headliner. In Financial Peace, I helped teach Dave Ramsey's Financial Peace at a church here in Northern Virginia. And even in that module, Dave Ramsey said that insurance, he found it to be the most interesting aspect, or one of the more interesting aspects of his curriculum. But he admitted that for many people, it's not the sexiest. Traditionally, it's not the sexiest topic. So it's like going to see the doctor. It's like going to see the auto mechanic. There are some vocabulary words and terms that you have to drill down to understand and to comprehend, to understand why this is important. So I'm going to read something really, really quick, and then I'm going to bring Alonzo up, and I have some basic questions for him. We're going to start off with some very, very, what's the word I'm looking for? We're going to start off with some beginner vocabulary words, and then if he wants to get a little more complex with it, I'll get out of the way and he'll teach us some things. So, but this is from my blogging platform, and I thought this would be a good setup for him. This is short, so please bear with me. Helmet Chili says, can I share this on Twitter or wait until it's reposted? Yeah, I mean, there's a link. You can copy and paste the link to Twitter. Yeah, please do. Have at it. Thank you, Helmet Chili. So most of you know that I'm in the business of search engine optimization. So I have 2 blogging platforms, and I publish content for collaborators and customers. And I'm so busy at this point, I only have time to write my own stuff every now and then. But this one is a guest post from a collaborator. When you own a blogging platform, people are approaching you all the time to publish stuff on your platform, and then they offer for you to publish stuff on their platform. But this one I thought was interesting, and I thought it was a good fit, and it's entitled "Breaking It Down: The Insurance Coverage You Need for Each Stage of Your Life." This is beginner. This is not even getting into the meat and potatoes of what Alonzo knows, but I think it's a good setup for what we're going to talk about. And this reads as follows. This excerpt says, however you define the stages of your life, you'll need to ensure you are insured. Okay. So 2 focuses of my blog are financial literacy / money and health and wellness. Insurance is a critical piece of all our financial healths. Interestingly, it's not always seen as the most exciting aspect of the financial world. Learning about how it can help you and your loved ones, however, can shed light on its importance. The following guest post is entitled "Breaking It Down: The Insurance Coverage You Need for Each Stage of Your Life." So if you look at that picture right there, that's a father with 3 children. When I was looking for thumbnails and images to use for this stream, if you go into Google and type in life insurance, most of the pictures bring up a family. So just a little food for thought there. Okay. Lives can be marked by milestones, decades, ages, and more. However you define the stages of your life, you'll need to ensure you're insured. There are many different types of insurance. but you might not need all of them at once. The type of insurance you need depends on your stages in life and your age. You'll need to continuously adjust your insurance coverage as you make your way through life. Here are the the different types of coverage you need for each stage of your life. YouTube, this is just for teaching purposes only. So this is not to tell anyone what to do or how to live their lives. And that's to the YouTube algorithm. This is for teaching purposes only. Every stage. There's one type of insurance you'll need for every stage of your life. No matter how old you are, health insurance is necessary for everyone, including babies, children, and the elderly. Children will be covered by their parents' health insurance, but as soon as you reach the age of 26, your parents' health insurance will no longer cover you. Okay. If you're over the age of 26, you'll need to get your health insurance either through your employer or the health insurance marketplace. While it's not illegal to forego health insurance, healthcare costs can be expensive and ruin your finances if you ever need emergency medical attention. The monthly premium is well worth the cost to help you avoid financial strain if you ever need to visit the hospital. Okay, so that's something I heard about and I remember hearing about as a kid, as a youth. And if you follow all of the election cycles, particularly when President Obama was running, and even back when Bill Clinton was president, universal health care, making sure everyone was insured, that's always a discussion point. Yeah, that's a big deal. And I think the Trump administration dismantled Obamacare, so there are people walking around without health insurance. And for some people, it was cheaper to just pay the penalty during the Obama years. Okay. Everyone knows this one. Driving. As a teenager, one of the most important milestones is getting your license. However, you can drive a car without insurance. If you're in an accident, your car insurance may cover some or all of the cost to repair your vehicle. It may also cover damage to another person's health or car. Some states are no-fault states, like Michigan. Michigan's a no-fault insurance, car insurance state. Renter's insurance. Renting an apartment. Moving out of your parents' house is a big deal, but you shouldn't forget to keep yourself and your friends covered in case of an accident. Renter's insurance covers everything from natural disaster damage to accidents that happen within your home. It can even cover your hotel stay if something happens to your apartment that was out of your control. Okay, homeowner's insurance. When you buy a home, you'll ditch the renter's insurance and get homeowner's insurance. Renter's insurance and homeowner's insurance function in the same way, protecting your finances from sustaining damage if there's ever an accident, theft, or natural disaster. One significant way that homeowner's insurance differs from renter's insurance is your insurance will pay to repair or replace your home if there's damage resulting from fire, theft, or a weather event. Okay. And most mortgage lenders, I know if LJ's still out there, that's making him bristle. But most lenders don't. They're going to insist that you have homeowners insurance if you're going to get a mortgage with them, or if you go to refi, because they want to make sure you can pay that loan, come hell or high water. Getting a pet. This is the big one here. Getting a pet doesn't require you to get any insurance. However, it's a good idea to give your pet their health insurance so you aren't stuck with a hefty bill if they get into an accident. Pet insurance covers the cost of surgery, health-related issues, and even accidents such as swallowing a foreign object. Those of you who have dogs know what that's all about. Pet insurance can help you save thousands of dollars if your pet ever needs to visit an emergency vet. Typically, if your pet needs medical attention on a weekend or an emergency visit in the middle of the day, you'll need to take them to a vet that specializes in emergencies, especially if your regular vet's office isn't open. These facilities often charge more for their services, but pet insurance can help you offset costs while ensuring your pet lives a healthy life. Okay, guys, we're almost done here. Your renters or homeowners insurance may also cover the medical costs of visitors if your pet happens to bite someone while protecting the home. Starting a business. If you start your own business, you won't qualify for employer-sponsored health insurance and will be responsible for purchasing your own. The good news is your insurance premium can be deducted from your taxes using a tax software. Coverage protects against financial loss from bodily injury, medical expenses, lawsuits, and property and equipment damages. Depending on the type of business, there might be other types of business insurance you should have. So you must do your research so you can protect your business and personal finances. Types of insurance you might require are general liability insurance, commercial property insurance, business income insurance. If you're not sure what type of insurance you'll need for your business, consider working with an insurance agent that can help keep you covered no matter what. Okay, guys, I promise we're just about at the end. Starting a family. Remember, I went back and I said, when I looked life insurance up on Google, most of the images showed families. So that's a huge context for this discussion. And Alonzo will probably talk about that to us. And if he doesn't, I'm sure she will. Starting a family. You can start building your family at any age in life, but no matter how old you are, you'll need to take a look at your current insurance coverage. As soon as you decide to start a family, consider getting life insurance, which will provide your spouse and family with financial stability if you pass away. She talks about that a lot. Life insurance can be especially beneficial if your spouse doesn't work and relies on your income to pay major bills. And then finally, the 30s through 50s. When you're in your 20s, you might only need a few types of insurance, including renter's insurance and health insurance. However, as you get older, you'll need other types of insurance that will allow you to put down more roots. These decades are the perfect opportunity to begin thinking about retirement, especially if you have an employer-sponsored retirement plan. However, it's important to remember you'll need more than money to have a good retirement. You might also want to consider long-term care insurance that will help you avoid paying out of pocket for a nursing home facility or long-term care. And I think this is the ending, retirement. Yep. During retirement, your major source of income is your savings or pension. As an elderly individual, you can expect more medical costs than in your younger years. So it's important to invest in quality health and life insurance plans. And then final thoughts. You're going to require insurance at every stage of life, but it's up to you to know what's available to you and decide what's best for you and your loved ones. One type of insurance you should have, no matter how old you are, is health insurance. While you might be young and healthy, you never know what could happen. So it's important to keep yourself covered at all costs to avoid high medical costs and protect your finances. Okay, that was written by a gentleman named Matt Casadona. I'd like to get an Alonzo Hall version of this up on my blogging platform. We've been talking about that, but Alonzo's a busy guy. So with that, Alonzo, you have the link. If you want to hit it, or do you need me to drop it in the link? I want to say one other thing for transparency. Let's see. Money is one of those things when considering adding these things, you have to think about your situation. Everyone's situation is different. I just want to acknowledge that I did do a consultation with Alonzo and his group, and we didn't move forward with anything because for my current situation, me and my financial team, we thought that I had what I needed as a federal employee. Federal employees have a FEGLI, a federal employee government life insurance. So I think that's enough to bury me right now. My family, I'm not married right now. I don't have a family. So my relatives would just need to bury me. That's it. So I just wanted to put that out there. And even that's a big deal. You see people dying and people having to do GoFundMe's to bury them, to cover expenses. You see all kinds of things. So Alonzo is here, so I'm going to bring him up. Everyone welcome Alonzo Hall, the All-Star advisor. Welcome, Alonzo.
Thank you, Dr. Dunbar, for having me up. I'm trying to fix my camera here. Hold on one second there. I'm trying to get it into the... There we go. That's a little better. This was definitely a great segue. And I want to thank you for having me, considering me to come up and do this with you. Yes, Dr. Dunbar and I did have a consult, and I'm glad that you mentioned that. What I would like to ask before I go into it is, did you find any value at all from the consult?
Yeah, I mean, I learned some things. It's a very involved process. Because I think you guys have to qualify people, right? You have to get a feel for what a person's life is like, what their health is like, how many dependents they have. You guys really have to take a real snapshot of the person's life before establishing that relationship. So you just don't go sign up for insurance. There's a whole process involved in it.
Okay, wonderful. Yeah, so part of that process, like you said, is the qualification process, and we do have to get a snapshot of your life. One of the things I like to call it is identifying and protecting your lifestyle. So one of the things that you had mentioned earlier in the health insurance piece is that a person will be on their parents' health insurance until the age of 26. Now, often, and this was mentioned as well, when you go to Google, a lot of the images are going to be around family. And there's a reason for that. Most people aren't thinking about leaving a financial legacy until they have a family, right? Prime example, you mentioned, FEGLI, obviously having, a spouse in the same sector or working in the same field. I'm very familiar with that. And it's something that is excellent to have, is something through your job. Now, being government employees, again, there is a limit to even what someone privately can offer you, because you guys you're pretty well taken care of by the federal government, which is one of the benefits of working for them. But that's why family is one of those images, because most people don't start thinking about it until they have a family, because they're thinking of leaving that lifestyle that they've built and protecting that lifestyle that they've built. There are other things to it. And, if time permits, I'll get into the weeds of that.
Okay. Well, I sent you some questions. I think the
Yes.
first two are pretty straightforward.
Okay.
So the first one is, and everyone, Alonzo has his own channel. So if you're not subbed and you want to learn some more, because I'm sure there's only so much we can cover in this time. The first one is talk about your background and how you got interested in insurance.
Yes. So initially, my background was actually music. I went to the University of New Haven for music and sound recording. But I decided to skip all of my music courses. But there was one course that I fell in love with, and it was my macroeconomics course. I had no clue what economics was, being, having the upbringing I had, humble upbringings, inner city youth, regular story. So economics was, not really on my on my lexicon of things. Fast forward 2008, 3 days before Mother's Day, I ended up getting shot 5 times in front of my mother, and almost losing my life. Well, that didn't actually put the bug into me to sell insurance until I moved to New York and was working at Macy's Herald Square. I became a top salesman there in their furniture and mattresses department, and I saw a commercial for Aflac, which said, if you like to educate people and make money, then insurance is the field for you. So I did some interviewing with some representatives from a few different carriers. Initially decided to start my career with Aflac. Was a little too blanket for me, so I went to Mutual of Omaha and started to cut my teeth on Wall Street. And that brings me to fast forward today. I've been doing it for almost 15 years now, and now independently.
Okay. What has your experience been like thus far as an advisor?
So that's actually a great question. In terms of the experience, it's been a roller coaster, and the reason being is because the longer you last in this industry or survive in this industry, I'll say, the more you learn. And then it will change your mindset on, things that you've learned or experienced in the past. Prime example, I did a video on elder abuse because, for example, as you mentioned, different stages in life will be people needing different insurances. So I was doing a chronicle on a policy that my grandmother bought 11 years ago, where she pays $50 a month or $600 a year for a $5,000 death benefit. But if that's $600 a year for 11 years, she's paid $6,600 into this policy, yet the death benefit is only $5,000. Now, this is a whole life policy, which is why you can see why some people would say it's a negative to a whole life policy. But not all things are made equal. Just like a sandwich from McDonald's, a burger from McDonald's is not the same as getting a Big Mac from McDonald's, even though they're both burgers from McDonald's.
Okay.
So yeah, it's been a roller coaster.
Okay. Your clientele, have they been multi-ethnic, or have you been dealing mostly with African Americans?
So my prime demographic has been African Americans. That's who I've been targeting personally. My client list is very diverse. The majority of my clientele, believe it or not, in my senior range are African Americans. In the younger range, who are buying more of my investment grade policies, I'm tending to get a lot of Hispanic and white people. But when I'm targeting the demographic, and especially in being on things like YouTube, I'm starting to reach the African American market much more substantially. And, I want to mention, in no way, shape, or form does one product fit all circumstances. Even when you'll hear representatives like myself who are very big on concepts like infinite banking, that by no means means that that's the best concept for, you or your next door neighbor.
Okay. Well, let's see. Now before we go, do these people, do you find that the different ethnic groups, they come with a certain base knowledge about this, or does everybody need to be taught, or do people already know, do certain groups already know about this?
There's some education that needs to be, so financial literacy across 95% of America is lacking. So there's a lot of education, no matter, what background most people come from. Now, in terms of preparedness or readiness for these conversations, I have found certain communities to be further ready. Prime example, one thing that I've noticed is there's a lot of what we call one-legged appointments in a lot of communities. Generally, with husbands and wives in the white community, there tends to be more one-legged appointments, meaning usually it's the wife who initiates the appointment and the husband is nowhere to be found. Another thing I'm finding is that often, which is very disappointing, is that children are not privy to these conversations, which they absolutely should be. If you're having a financial conversation, and especially in the African American community, the children are sent to listen, adults are talking, go in the other room. Whereas I've seen in a lot of other communities, can my son sit in on this? I don't know about it, so I want my son to kind of learn about it, what I didn't learn. And so you're starting to see that. But again, that's 95% of America who's not completely financially literate.
Okay. All right. You know this industry back and forth, but I think, as I said, it's like going to see the doctor or an auto mechanic, because all these terms are going around. You don't really know what they mean. Can we go over a few basic vocabulary words for beginners?
Absolutely.
Okay,
So
and then afterwards,
here.
yeah, I'm sure she'd want to come up and other guys, but let's drill down some basic terms first. So these are the three terms I hear most when I hear experts talking about insurance: cash value, term, and whole life.
Mm-hmm. So let's start with cash value and what cash value is, okay? Because two of these terms are synonymous, which is whole life and cash value, okay? So whenever you hear cash value, you should automatically think whole life. And whenever you hear whole life, you should automatically think cash value, okay? Because cash value is a feature and or benefit of a whole life policy, okay? What cash value is it's a separate building or accumulation of the stores of the premium that you're paying or the monies that you're paying into the insurance policy. And it's like a separate or a forced savings account for you, the insured. And you can access this money in terms of a loan where you can borrow against it, or a withdrawal where you actually just extract the funds, or you can do what's called reduced paid up and cancel the insurance, but whatever cash you have put in will leave you with a death benefit, or you can completely what's called surrender and take all of the cash value. Okay, so think of cash value as a forced savings account attached to your whole life policy. So then term. Term is probably the easiest, most basic insurance, and to understand. Term is, for all intents and purposes, death insurance. For example, if you get, so the average term policy is literally that. It's going to last for a length of time, like a presidential term. So the terms on life insurance policies are generally 1, 5, 10, 20, and 30 years. They do have 15, 25, and all sorts of different variations. But for the most part, it's 10, 20, and 30 years that are the most common. 20-year term is the absolute most commonly sold policy to most individuals. But what a term policy means is you have pure insurance protection for the least amount of dollars. So you're giving the insurance company the least amount of dollars to assure that when the event occurs, meaning death, your beneficiary receives the death benefit. But all you are purchasing is the death benefit. You are not purchasing any other features or benefits. Now, in a term, you're also purchasing for generally 1 year less than the length of term. So, for example, if you purchase a 20-year term, you are planning on dying in 19 years. If you do not die in 19 years, every dollar that you spent on that term policy is forfeited to the insurance company, and year 20, you no longer have life insurance. You do have options available to you. We'll get into that later. I just want to get to the base surface of the terms. Does that kind of clarify those so far?
Yeah, I think so. And I just threw annuities, wills, and trusts on there because they mentioned those in the Ebony article.
No problem.
And okay, so Alonzo, you know what else comes up? We're talking about insurance is you see on Dateline and Forensic Files the spouse killing the other spouse to get the insurance. Which one are they usually after? Are they after the cash value, or are they after the term?
In that, they're after the death benefit. So in that situation, regardless of if you have a whole life or a term life, the death benefit is the payout you're looking for. So if you have $1 million term life policy or $1 million whole life policy, when you die, the person who receives that money doesn't care what it was, as long as they get the $1 million. But a whole life policy is for life insurance. A term life policy is for death insurance. Now, there are features, if you don't mind, can I speak to kind of the pros and cons of each?
Go for it.
So some of the pros of a term policy are, number one, you can get a really, 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 really big death benefit for a small amount of money, right? So if I want to make sure that when I die, my wife gets $10 million, it might only cost me $500 a month. Whereas with a whole life policy, $500 a month might only get me $100,000 death benefit. But what else does it get me? So there's other features and benefits that a whole life policy will get me that a term won't. But another benefit to a term is limited payment. So I don't have to pay this thing in perpetuity. I'm not just paying forever and ever and ever and ever and ever, because that's what whole life insurance is, right? As far as everybody knows, term, at least, I'm paying this, but I know I'm paying it for, a certain amount of time. I know after 20 years, I don't have to pay this anymore, right? It's not like, even with a mortgage, you know that a mortgage after 30 years, you're done paying. It's supposed to be, right? So there's something about having a finite amount of time and with which you are paying your policy. So that can be a positive as well with term insurance. So you've got large death benefit for low cost, which is attractive. And you've got limited time of payment, which is attractive. Number three, term policies are generally easier to qualify for. So according to LIMRA, which is the Life Insurance Marketing and Research Authority, in 2022, the beginning of 2022, the average death benefit payout was $168,000. So what that tells a licensed financial professional is that most people are likely to be buying a term policy, because term policies, you don't have to do as much qualification as you do with a permanent policy, because there's not as many features and benefits, and only 1% of term policies in existence pay out. Now, on the flip side, only about 25% of whole life policies in existence pay out. The reasons for that is because a lot of people cancel them. Am I going too far?
No, go ahead.
Okay. So, term policies have their place. And, there's a great concept called BTID, which is buy term, invest the difference, which sounds great on the surface level, but for most people, it doesn't make sense. Because, for example, there's a company that will tell you to buy term and then invest the difference at $25 a month in a mutual fund. Well, no real financial advisor would tell you to do that. Any real investment advisor or financial advisor would tell you the minimum investment is $10,000. $10,000 just happens to be $834 a month. So if there's a person who's having difficulty paying $300 a month on a term life insurance, not even a permanent, but let's say $300 a month on a term life insurance, it's not likely that they're going to be able to afford to invest the difference or invest it all when the minimum of an investment is $10,000 or $834 a month. So some concepts are built to sound nice, but not actually work, right? It's just like if I were to tell you to go get a money market account right now from Goldman Sachs, Marcus Millichap. It grows at an annual percentage yield of 0.5%. So if I put that in math, that would be $100. You would have to wait 1 year to earn 50 cents on your $100. Now, a whole life policy, which a lot of people will tell you to not get, grows at a minimum compound interest rate of 2%. So the same scenario, you could go to Goldman Sachs to get 50 cents on your $100 a year, or you could go to Average Joe's Life Insurance Company to get $2 a month on your own $100. But people aren't being taught this because it's easier to qualify for a term policy, and it's easier for me as an agent to get commission on a term policy because you don't have to go through a 25-minute health conversation with the insurance company. You don't have to go through, a blood and urine exam. There's so many other things that you're likely to not have to go through with a term policy of $250,000 or less.
Okay.
Kind of makes sense? Oh, go ahead.
Yeah. So, Alonzo, so are there specific types of insurances that you, of all the clients you handle or potential clients, are there certain things people are better suited for? I mean, is a whole life cash value, is that just a better deal across the board than term? Or are there some people where it's better if they do the term?
So it's circumstantial.
Mm-hmm.
I would never recommend, if you're going to live a whole life, I would recommend a permanent policy. But then when you're getting into permanent policies, just like when you're getting into term policies, there's a multitude. So if someone absolutely wanted a term policy, generally those are circumstances, for example, where let's say you are a new family, you've just had a child, and you've made someone the godparent. Well, you're not going to need that insurance for your entire life. But if you should die between your birth, the child's birth, and the time that child is of age, let's say 18, and no longer needing a legal guardian to take care of them, then you only need a 20-year term for that situation. But the average wealthy person insures one life 7 times. So everything is a good product to have. But a term will be, if, for example, if I get a loan and I want to collateralize it. So say you are selling me a property. Say you're selling me your house, but I don't go the traditional route of a mortgage. We do seller financing. So you're going to allow me to pay you X amount of dollars a month for the next 30 years. Well, God forbid something happens to me along the way. You want to make sure that you get paid. So I would get a 30-year term life insurance policy. That's exactly the amount of what we're promising to pay you for your house. And that's the mortgage right there. We don't have to include the bank. So there's different reasons for different policies. Now, I generally recommend universal life. And then when you're looking at universal, there's a multitude of those. So there's indexed universal, there's regular universal, and there's variable universal. I prefer indexed universal. It's kind of all of the upside of the stock market, none of the downside. It's almost like a hedge fund. But also when you're looking at term, there's different types of term, right? There's increasing premium term, which is every year your premiums increase. There's annual renewable term, which means every year your premium has to be renewed, but you don't have to have a health exam. Okay, there's convertible term, which means that after a certain period of time, they're going to allow you to convert that term into a whole life policy. And then there's my favorite term, which is not admissible in all states, but I feel if you're going to get a term, this is the term you should get. It's more expensive, but it's more expensive than regular term, but it's generally less expensive than whole life. And that would be a return of premium term, where at the end of your term, every dollar that you've spent in premium is returned to you. Okay? And that's just for term. Now, again, when you're looking at whole life, there's different types. So there's senior whole life, which is a graded death benefit, which is the policy that I told you about, similar to my grandmother, where it's a $5,000 death benefit, but paying $600 a year for the last 11 years, she's paid $6,600 into it, but that cash value isn't built there. Well, there's something called the cost of insurance. So when you're looking at investing, you're looking at a calculation called TVM, or the time value of money. So when you're looking at whole life policies or universal, anything permanent that has a cash value, you want to look at the time value of money, because these are going to be growing at compound interest rates. See, the wealthy generally use life insurance for these purposes, which is why they tell you, hey, buy a term, because 1% of term policies, most people outlive their term life insurance. And then you get to an age where, like my grandmother at 69, was too old and unhealthy to afford regular life insurance. So she had to get a senior policy, $9.95 per month per unit, like you see on the Colonial Penn commercial. It's a whole life policy. It does build cash value, but it's a $5,000 death benefit for $9.95 per unit, which is $1,000 of insurance. The minimum you can buy is $5,000 worth of insurance. So everybody's paying at least $50 a month for $5,000 worth of insurance. Or you could have got it 20 years before and had $5,000 worth of cash value, paying the same amount, $5,000 worth of cash value a year building, and a $500,000 death benefit. You know, obviously this is arbitrary numbers, but you
Okay.
get.
Okay. First of all, I want to thank CR Frank for the super chat, $5 super chat, and I also want to thank Kareem Austin for the $5 super chat. So let's go back. Geez. Well, I'll ask you this one first. So you said something about the accounts being invested in the market. Are some of these invested in the market?
So they are not invested in the market. Okay.
Mm-hmm.
They mirror the market. So it's the upside of the market, not the downside.
So they're indexed.
Correct.
Okay.
Now, they're not investing in the index fund. So you'd say, well, how is it? So what happens is, basically, insurance companies are hedge funds. And what they do is they have separate accounts where they have assets that they invest. Those assets they invest in are normally in bonds. Now, that market portfolio is where they get their interest rate, where they're able to offer you 4%, or well, now 3%, thanks to IRC 7702, 3% monthly compound interest growth. However, in an index universal, what they do is they take some of that net operating account and they invest it in the purchase of options. So when they buy stock options, if that option accretes, that means that it increases and they get a windfall. They are then able to take that and put that back in their operating account and credit you interest. With your additional interest, there's the win, and that's how they're able to continue to guarantee you compounding interest. Now, should that option that they purchase lose, they just simply let it expire. Hence, they only lose whatever they initially invested from their initial operating account. So not touching any of your interest, your cash value is still able to grow, mirroring the market, gaining all of the benefit and none of the downside. I hope that makes sense.
Okay. Yeah. I'll be listening to this back and forth, and I'll probably clip some of the pieces and re-upload. Valet Waste Disposal LLC. Thank you for the $10 super chat. He says, I am 38 with two sons, both under 2. I have a term with Primerica. Okay. I pay $217 for $1.5 million. Is this too much? I have no health issues.
In terms of your premium, that's very vague. It really depends on your build, right? For example, I'm 38 and I have a couple of health issues, but I would pay substantially more for a term. And then it also depends on the length of term. Primerica is actually one of the more expensive companies out there. One of their models is buy term, invest the rest, and they'll tell you to buy term and purchase a $25 mutual fund, which they don't tell you about things like the money man. Like a lot of people who argue that will say, well, what about the fees in a permanent insurance policies? And I'll say, well, what about the fees, the 2 and 20 fees that you don't tell your clients about a mutual fund? So 2 and 20 fees being 2% of your net worth and 20% of your capital gains. For $1 million, that's pretty reasonable, to be honest. You know, $1 million policy, $200 a month is not crazy. You got to think about it. You're getting $1 million term. Now, is that a 10-year term? Likely it's a 20-year term if it's Primerica. I don't know what your expenses are. I haven't done a fact finder with you to be able to really identify and protect. So all I can say is congratulations on having something. I would have a second sit down with a financial professional who's not with Primerica. You can literally, you can go to my website, adhwealth.com. You can gladly, New York Life has some great advisors. Northwestern Mutual has some great advisors. But yeah, I don't like to talk negative about certain companies, but their training is very limited. And anytime you have a company that promotes only one product, I have a lot of pause with that. So even people like Dave Ramsey and Sue Zorman, Dave Ramsey promotes term insurance, but his largest holding is a cash value life insurance policy. So, it's,
So Alonzo, let's stop right there. And I don't want to get us too far into the weeds, but why is that the case? Why would he do that? Why would he recommend? I imagine it has something to do with him being in the wealthy class because he is a teacher and he makes a lot of money off those classes for a good purpose. But why is that?
Why does he hold his cash value or his largest holding is a cash value life policy?
But he's recommending term for everyone else.
Well, number one, he owns a large stake in a term life insurance company, which is why he's recommending term. But term, it is for most people, term is going to be permanent life insurance is cost prohibitive. And most people are purchasing for the death benefit. They're not purchasing for the features and benefits. I've done a video before equating life insurance, a $100,000 death benefit life insurance policy to each class of a Mercedes-Benz. So if you get an A-class Mercedes-Benz, it starts at $29,000. That's a term life insurance policy. It's still a Mercedes-Benz, but it doesn't, when you're really looking at a Mercedes-Benz, a C-class is the starting point, which starts at $34,000, which would be a regular whole life. But then if you really want to get into a Mercedes-Benz, you got to go to an E-class. So that would be like a universal life. But if you really, really want the Mercedes-Benz, well, it starts at $97,000, and that's an S-class. Well, that would be an indexed universal. Now, these are all still Mercedes-Benz, and they're all still life insurance, so they're all still excellent. It's just different features and benefits for different persons at different points in life.
Okay. All right. I want to take us back to one more thing. I have a few more questions, and then I know Sheed and Rael probably want to say something, or maybe you want to say something else. I don't want to hold you all night because I have to go in the office in the morning. You mentioned the wealthy using it as a wealth building tool because most people look at it for the death benefit. It's strictly the death benefit to leave your wife and kids or whomever so they can bury you. But talk about how that works, how it's a wealth building tool and how they use it that way.
Wonderful. Well, again, like I said, you're looking at compound interest. So number one is the power of compound interest. And number two is, like I said, TVM, or the time value of money. So those calculations at a low cost of dollars can actually get you a high cost or a high amount of insurance. If I may, and I'll probably have to do this shortly, but I'll show you what it is. So what they do is they buy wealth contracts, okay, versus buying death benefit. What Dave Ramsey is telling people to do is buy death benefit, which that's what most people think of when they buy life insurance. I'm going to if I can, share my screen. I'll show you something that are two brief illustrations. Let me see if I can pull it up briefly. Give me one second here.
And to the YouTube algorithm, this is for educational purposes only. We're not,
Yeah, this is for education.
We're not looking to violate community guidelines or anything. We're just having a discussion.
This is This is not financial advice. For financial advice, please seek your financial advisor or certified financial professional.
Right. And the other thing is, yeah, if you're not subscribed to Alonzo's channel, he's the source for this information. I mean, we can't possibly cover everything in this hour and a half that we're going to do. So if you're not subbed, please go over and sub.
Okay. So if I'm going to have to share my whole screen. Hold on. Bear with me 1 second. Let me just do it like this because it's easier this way. Okay. Whenever you're ready. Okay. So, I just dropped my camera. This particular scenario, I have a young lady who has $50,000 to invest. Now, here's what normally happens when someone takes life insurance. We purchase the percent of target. So you're buying the most death benefit possible. This is what Dave Ramsey is explaining to you why whole life insurance wouldn't seem attractive. So for $50,000, this 26-year-old non-tobacco using woman can get a $9 million death benefit. Hold on. Let me increase that. Do you see that there?
Mm-hmm.
Okay. But what we want to look at is our cash values and our cash accumulations. So she's got a $9 million death benefit, but her cash value is is non-existent. Now, if we do this a certain way where we purchase the minimum amount of death benefit for the same cash, for the same 50,000, we'll see something substantially different. So here she's spending that same $50,000. Again, it's the same 26-year-old Brittany Johnson investing $50,000, but it's a $992,000 death benefit, right? Here it's a $9 million death benefit. Here it's a $992,000 death benefit, okay? So the importance of that, and I'll go ahead and stop sharing. I just wanted to show those. The importance of that is because you're buying the money or the wealth behind that, right? So what Dave Ramsey is not explaining, and what a lot of people are not explaining, is that you're looking to buy the minimal death benefit so that you explode the cash value and you build up the cash value into these policies. That's how he's able to have it as a wealth contract. Is that making a little more sense?
Yeah, I think what I heard you say is that the amount of the death benefit, it's impacting the overall value of the contract.
Yes. Okay. Yes. So again, same scenario. This young lady is 26 years old. She wants to purchase some real estate, but she doesn't have the greatest credit. So I'm putting her on a mortgage acceleration plan. So I'm going to have her put $50,000 into this life policy. And then it's also, the beauty of it is that life insurance is highly liquid. So now when she goes to the mortgage loan originator and she says, I have X amount of dollars for down payment. Well, here's the beauty. See, if you have, when I went to qualify for my mortgage in New York City, we qualified for $1 million. But then I got a nice commission. It wasn't a huge commission. It was only $2,000. But I put that $2,000 in my bank account, and the mortgage loan originator was like, hey, what the hell are you doing? This changes all my calculations. This one small amount of $2,000? Well, yes. Well, the benefit of this money being in the insurance company, it's with a established financial institution, so there's no way you can fudge the numbers. It's highly liquid if it's in a cash value life insurance policy, because you can just borrow against it. You can actually establish your own credit by borrowing against your cash value life insurance policy and paying it back, because a policy loan is generally going to be paid back at 5 to 7%. And because you're paying it back to a licensed financial institution, they're going to report that to the credit bureaus, just like they want Standard & Poor's, Moody, and AM Best to give them credit ratings. You want to look at the financial strength of your company. I'm sorry, I just had a lot of stuff I could go through.
That's okay. That's fine. That's fine. We're here to learn. Let me look at these. Okay. So just two more softballs, Alonzo, and then I'll ask you one more, and then if any other guys, because I know she's worked with you. You guys have worked together. So just briefly, in annuity, because in our discussions we talked about that. That's a vehicle that when you retire, you pay into it during your working years, and then it pays you out money when you retire.
Correct. So an annuity or an IRA, but specifically an annuity, because their tax treatment is a little different, is a payment till death. So let's take this in, again, we're looking at the money mistakes in retirement. Let's take a look at a 401k versus an annuity so I can kind of explain the differences. Because a 401k would pay out what's called period certain. An annuity is a payment for life. So let's say you have a 401k, and we're going to use arbitrary numbers. You have $120,000 in your 401k. You're 65 and you've retired. That is going to give you $1,000 a month for 10 years, or $120,000. At the end of that, at 75, you now have to go back to work at Walmart. That's a 401k. That's period certain. What an annuity will do is you've put in and accumulated that same $120,000. At 65, you've retired, and you're promised these. Now, again, these are arbitrary numbers. I'm not saying that at 120,000 you're guaranteed $1,000 a month, but I'm just doing that for the illustration of this conversation. So that $1,000 a month, 10 years passes, you've ran through all the money you've put into this policy. Well, because it's an insurance contract, you're still going to get $1,000 a month every month until the day you die, even though the money you've put into the contract is gone.
Okay. All right. Last one. Now, do you do wills and trusts as well?
No. So the only one who can draw up a will or a trust is an attorney. They have all these, do it for free, mail it to yourself. No. A licensed financial advisor can help you fund a trust. But to make it legal, it needs to be drafted by an attorney. We can help you establish a will, but in order for it to actually be established and for it to be legal, you must have it drafted by an attorney. No, do not screw having a 401k.
Well, you know what? Alonzo, this is a good question, because I've heard, with what's going on with the economy and the inflation, that these plans are running into some difficulties. I don't know the specifics of them, but people are questioning this option right now, the 401k. But he's asking, so screw having a 401k. I think that was related to what you were saying, and you would say no.
Yeah, no, do not, by all means. Listen, it's free. If you are going to get an employer match, you should contribute up to your employer match. So if they're matching you 3%, go in all in with the 3%. They're going to match that. You get your percentage. Now, Sheed's going to say, screw a 401k, because he's going to say you should do what I recommend, which is a LIRP, a life insurance retirement plan. I do sell those, and I do recommend them, but I also sell 401ks. So at the end of the day, I'd say whatever you do, come see me to get it. But if your 401k is going to be through your employer, so it's a benefit and it's a feature of being with your employer, I would absolutely recommend having it, and I would absolutely recommend privately doing a LIRP. A LIRP is that scenario where, just like the young lady I showed you, instead of putting $50,000 into a $9 million death benefit policy, she can put $50,000 into a $950,000 life insurance policy. Now, a lot of agents would say for $50,000, you can get way more of a death, but you could get $9 million. And that's where your psychological capitalism comes into play, like LJ would say. Right? Because psychologically, you're like, well, yeah, for 50 grand, I'm getting $9 million. I want to be worth $9 million, because life insurance, permanent life insurance, adds to your net worth. The cash value in the insurance policy adds to your net worth.
Okay. If any of you all have more questions or comments in the chat, please keep them coming. Once again, Alonzo is the authority figure on this topic. If you haven't subbed, please sub. We can only cover so much in this little introductory session we're having here. I'm gonna ask Alonzo two more questions, then I'll drop the link in case anyone else wants to come up and say some things. I was a little long-winded at the beginning, so he didn't come up until 30 minutes in to the stream. Alonzo, we talked about a lot of things. What are some brief takeaways you recommend for the novice? I mean, Sheed and Rael know a lot, but for the novice, what would you recommend, or as takeaways from this?
Number one takeaway is sit with a licensed financial professional and review your options. Ask a lot of questions. Okay. Yeah, he says, in IRA, you can only, or 401k, you can only put a max of 20K. We'll get into that in a minute, Sheed. I'll get into that momentarily. But I do want to, you want to sit with a licensed financial professional, and you want to review things at least once every 2 years. That would be a major takeaway, whether that's your car insurance guy, because a lot of these products can be offered to you from your car insurance too. So Farmers is one of those companies that has a lot of the life insurance and financial services products as well. State Farm, which is, I hate them and I love them, but they're one of the biggest life insurers in the country. They actually offer some pretty robust life insurance products. They used to offer bank products and mortgages. They also offer some securities products. I used to work at a State Farm, and I used to co-own an Allstate. Allstate does not offer life insurance anymore. Geico does not offer life insurance. Geico is co-owned by Warren Buffett, and Geico's life insurance holdings are with Byberg and Mutual of Omaha.
Okay. Let's see. Once again, Alonzo, well, your channel's all in the chat. Let me see.
It's all over the place.
Let's see. So I'm gonna, if you're willing to entertain a few guests, I'm sure Sheed and Rael will come up.
By all means.
You got a few minutes?
Yeah.
Okay. And everyone, just as a backdrop, I was doing a purge here at my place and trying to throw things away. There's more stuff to throw away, but I did find my mentor gave me this article. This is entitled, most of my audience is Black. It said the 6 biggest money mistakes Black people make. And then number 5 is actually not having life insurance, a will, or a long-term disability insurance. So that's when I saw this. I just saw this over the weekend. I said, I gotta get Alonzo in a stream. This is the article here. The link is right there in the chat. And this is something all of you should save, because, we in our community, we go to school, we get our diplomas, and you kind of think that's it, and the big emphasis is getting the diploma. But there's a whole other host of decisions that you have to think about, and decisions that you have to make once you get your diploma and once you start working. It doesn't stop with getting the diploma. And people make mistakes because they don't know even just the difference between cash, whole life and term. So I'm going to drop the link in the chat if some of you guys want to come up and say a few words. You can come up. I'll let this go for another 20 to 30 minutes, then I'm going to shut down because I have to go into the office in the morning, which means I need to get to bed at a good hour. So the link is here. Sheed, if you're still out there and you want to say something. Rael, if you want to say something. If anyone else wants to say something on the topic, the StreamYard link is right there. Go ahead.
In the interim, I actually I just got off of the line with an estate planning attorney today, and we were actually joking back and forth because he was mentioning, I said, it's a shame I do this all the time, and it's so surprising how many people don't have a will. And he was like, dude, I work in this field. I'm an attorney. You should see how many attorneys don't have a will. In fact, my good friend died about 2 years ago at the age of 70. She was one of the best attorneys out there. She could write you an entire dissertation about what she had for lunch. She had cancer and she decided not to leave a will. And her 2 nephews, who she hated because they disrespected her father, ended up inheriting all of her property. And she wanted them to get nothing. And they got it all because they were the closest next of kin. And she died what's called intestate, which is very dangerous to have happen. In fact, while I'm at it, if I can, let me pull this up while I'm at it as well. I did something recently. A friend of mine, and I don't like MLM companies, but a friend of mine joined Legal Shield. And I decided to join up with him for the sole purpose of getting this one document.
Okay.
Which is a will questionnaire. So now, as you've seen in our process, Dr. Dunbar, one of the things that I ask to my clients is if they have a will or an attorney, right? So now I can actually help them in writing up the questions that they need, that most attorneys are going to need to have you draft up a will. Now, when I Googled how much a will or final testament costs, on average, it's about $1,000 for starters. And Sheed's in the building. What's going on, brother?
You muted.
I'll say my life insurance is better than your 401k. I keep pushing that. But yeah, shout out to everybody in the building. Yeah, man, this is one of the topics I always harp on, letting people know, man, life insurance. Like I said in the chat, I mean, I literally started the process of actually having all 3. I got term, I got whole life, and I got universal life. My thing was to kind of get the term like everybody else because it's cheaper and it's cheap. I mean, you get a whole lot for a cheap price, and then over time, if you don't, kind of die out, 20, 30-year term, then you got to consider you done paid all this money into what? So that was one of the things that kind of harped me into start looking into whole life and everything, because majority of the family members, they all got, just basic term lives. And the ones that did get whole life, it was because they wanted to leave some money for, certain family members and stuff. But, in the end, everybody had the knowledge to learn about life insurance and how it affects the family. And so our biggest aspect was, because my great grandma, she always told everybody, get life insurance. You don't want to be a burden to no one. And even to the people that actually don't have kids, my thing is, why not? Take that money, put it into a whole life, and let's say you do get a family. Once you get a family, that policy's there. I mean, shout out to Alonzo. The policy that I have for my kids is not only going to be a term life or, just money in the bank. They can actually take the policy, withdraw out of it so much, or take it and give it to their family, and it's only going to be increasing throughout the years. So as they get older, they don't have to go and try to customize another policy. They can just add more money into this universal policy and just let the policy grow. And if they want to add another, for the family members, or for, I'm going to keep this for my immediate family, I'm going to do this for the nieces and nephews, there you go, So I'm gonna go ahead. I'm just saying with that, start looking into, like I said, the people that are single, I keep telling them, why not get a policy? When it's time to go borrow money for an investment deal and the banks don't want to give it to you because they're much like saying you might be too much of a risk or your credit is not there, you can always borrow from yourself. So that's one of the key things. A lot of people using life insurance just only for paying out families. It pays out yourself. Like Lonzo always saying, life insurance is life insurance. Death insurance is death insurance.
All right. Thank you, Sheed. We've been joined by Salchi H.
Hey, how we doing?
Hey,
How you
Salchi.
doing?
Things good. I think as Alonzo, as you know, being in the finance industry, the biggest thing is people really don't sit down and have honest conversations with themselves, let alone whether they have a spouse or not. So I think that's the biggest issue, let alone being uneducated about various investment tools, because they're tools. So if you don't know, where you want to go and what you got going on, how are you going to know what vehicles you need to get where you need to go? So I think, at least for me, from what and believe it or not, even where I'm at, and I deal with, small business owners and some sizable business owners, you'd be surprised. Maybe 5% of them are on point with all this stuff. I'm being generous. So the general public forget about it. This stuff is very foreign to them, even though it's very important. So I just wanted to harp that people really just need to sit down and have an honest conversation with themselves. What age am I at? What industry am I in? What's my current income? Take home. I always look at take home and then the income potential, okay, in your lifetime. And again, obviously, the guys who have some of the best numbers are insurance companies. These guys have been in the business for hundreds of years. Hundreds. Okay? They got more money than banks. That's just the fact. So I would encourage people to really just sit down and have a conversation with themselves. Just have an honest conversation with themselves, man. Because other than that, like, you will be blind financially.
So, Salchi, can you just unpack that a little further? Having a conversation with yourself. What do you talking about? Goals? You're talking about how much debt you have? You're talking about
everything. Believe it or not, it doesn't take as long as people think it would take. Your finances. I mean, you have a checking account for the most part, okay, and some of them kind of do a little bit of bookkeeping for you. I mean, it's not 100%, but you can start there, depending on your income, of course. It shouldn't take you more than 30 minutes. And you see where your expenses are going. Obviously, food, energy, those things are gonna be variable for the most part. But if you have a home, it's a fixed cost, excluding obviously upkeep and property insurance. Excuse me, property taxes. But the mortgage itself is fixed. Okay, you should know your health. You should at least be getting an annual, so you know where your health is. You have a good trajectory of what's going on. Okay, so even with that, and I typically, especially for healthy people, I typically recommend, and I send them the link to the irs.gov HSA, and yeah, it's right now it's at $3,260, no, $650 a year. Mm-hmm. But the thing is, that's with after-tax dollars, and technically you can semi-invest it, but I look at that as my retirement health expense. So I'm going to have health insurance. I have health insurance now. I'm going to have health insurance in the future, of course. But if something hits the fan, I don't want to be beholden on the insurance company talking about, well, no, I got the cash. So I'm always playing two sides of the coin, always. So that's another thing, people need to sit down and talk about. Or if you're married, again, now you need to, your spouse needs to have that conversation with themselves, and then you guys need to have that as a couple. And then another major factor is if y'all have kids, so you can put that in and factor that in. And of course, obviously, death, and he obviously Alonzo brought in the will, and it's unbelievable. A lot of these, especially unfortunately Black celebrities, how many more do we need to see that don't have a will? It's mind-boggling. So I think those are just basic things, that you could literally, I'm telling you, on a Saturday or Sunday evening, I'm telling you, 3 hours, you can set the foundational stage for your life. And then all you're doing from that point on is just monitoring things and updating things. That's it. Like, that's what I do. And that's what I try to get people to do. And the few who have listened, they're like, oh, this is not as hard as I thought. I say, yeah, because, you know what you want. And the only difference that really changes is what's going on around you. And all you're doing is just adapting and updating your figures and numbers on facts. That's it. You're done. You can go and live your life.
Exactly. Now, one thing I did want to do really quickly, actually, Dr. Dunbar, if you don't mind, is I want to share one more thing with folks, which is part of one of the processes that we went through. Right? Let me see. Let me make sure I got the right one here. Is it? It's this one. Okay. Someone to share this one. Because I think, and this is an actual client. I erased his information, so we don't show his name and everything. But this is a process that you want to go through, and this is what we're talking about when we're talking about identifying and protecting your lifestyle. Okay, so you should be going through this with, even if you're car insurance agent, you should still be going through this type of a process, right? So we're going to go over your personal information. We're going to find out what your occupation is, your dependents, your residents, trusted contacts. If you currently have a will or an attorney, which most of the time, this is not blank because I erased it, but most of the time it's blank because 90% of my clients don't have a will or an attorney on retainer. Most of my clients don't have an accountant.
Facts.
Okay. Then we're going to go through your occupation, see what your annual income is, and then we're going to take a look at your financial information about your assets and liabilities. Because one of the things that I don't think people look at is if you have a certain lifestyle that you're setting up, you want to maintain that lifestyle. Just like it's stated in the article, your health care is on your kids till 26. So you need to, if you die, right? Like that person said, I have $1.5 million worth of life insurance, but I have two 2-year-olds. I want you to ask yourself this, sir. If you died last night, would that $1.5 million last your 2-year-olds until they were 26 with the lifestyle that you've accumulated for them today? If no, you're likely underinsured. But the average person who, for example, when we're looking at leaving legacy, the average income is $50,000 a year. In order to leave $50,000 a year to your family for 20 years, you need $1 million worth of death benefit. However, if you want to leave $50,000 a year to your family in perpetuity, you would actually need a $10 million death benefit, with which point you would then take that inheritance, come to an advisor like myself or Salchi, and then we would put that in a money market account. That money market account would grow you in this current interest rate 0.5%, which would be $50,000. 0.5% of 10 million is $50,000 in perpetuity. That's one of the ways that people like Dave Ramsey are using life insurance for its wealth aspect.
Okay. All right. Well, guys, let's see. We're at an hour and a half. I think I'm going to go ahead and wrap up. Salchi, first of all, thank you for coming up. Do you have any? Well, first, thank you for what you said. Do you have any parting comments or anything to add?
Yeah, I think it was a great stream. Insurance is ambiguous to the common person. Again, I mean, in America, we're spoiled here. We have access to, a lot of things. And like I said, we could just sit down for an afternoon and literally educate ourselves on basic things. And then you can go to a professional like Alonzo, and then you can have in my opinion, an intelligent conversation. And then you will know what you really need in terms of covering yourself, with insurance based on your situation. Because a lot of these things that goes on in life, a lot of the things that are marketed, it's very broad. Okay, and people seem to forget about their own, personal situations. Oh, you hear, I heard my friend or this person, that person, they did this, that, and the third. That's great. What do you have going on in your life? That might be a horrible, solution for you. We don't know. You need to sit down again with yourself, and then you need to sit down with various professionals to look at the facts. So that's why I always harp on just the facts. I understand for a lot of people it's boring and it's tenuous, but once you set the foundation, I'm telling you, it's simple moving forward. And those are my end words. That's it.
Thank you, Salchi. I want to read something she put here in the chat. He said Black Panther, so Chadwick Boseman, and both Prince and Michael Jackson, none of those guys had wills?
I believe Michael Jackson had an estate, but I know that Black Panther, Chadwick Boseman, didn't.
Okay.
I believe Prince did not have a will either.
Correct.
But he was a Jehovah's Witness, which is, I believe, why he didn't have that.
Oh, they don't believe in having wills?
There's a lot of stuff that they don't believe in having.
Okay. Alonzo, the guest of honor, do you have any parting words? Where can people find you?
You can find me all over the place. My website, www.adhwealth.com. You can find me on Facebook, Alonzo Hall, the All-Star Advisor, Instagram, the All-Star Advisor, YouTube, Alonzo Hall, the All-Star Advisor. I'm trying to keep that brand all across the board. I will likely be doing some more channels only because I kind of got lost in certain algorithms with this channel. So, to kind of rebuild myself up and kind of get into different algorithms, maybe good or for the better or the worse. I need to get into some different algorithms and different exposure. One of the things I will say, please sit with a financial professional early on and often. The earlier, the better, because of the time value of money. If someone would have told me at 18 what I know at 38, I'd be a bazillionaire by now. They all say that, but no, I definitely would be better off financially in life than I am today. And I think that's very important to look at. And I see Sheed here is talking about the 401k. There is some truth to that. I'll be doing some videos on that in the near future. Thank you, Dr. Dunbar, for having me up here. Thank you for, your inspiration in being a Black professional, having an image and being down to earth, enough where we can, have access to you and have everyday conversations. So thank you for that. And salute to everyone in the chat. You know my motto: when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge.
All right, thank you, Alonzo. I'll shoot you a text offline. All right.
No problem. Thanks.
All
Talk
right.
to you later.
Thank you. All right, everyone. I'm gonna wrap this up. Max Soul Excellence says, appreciate this, Doc. Well, I'm glad you appreciate it. So I'll do a few more of these. Remember, now the direction of the channel is education, reading and writing, and also interviewing and having on interesting and compelling guests. So expect to see more of this, more book excerpts, more voiceovers, those kinds of things. So this article here from Ebony. Okay, this is below in the description box. This was kind of the backdrop for this. This is in the description box. If you're watching on the playback and you want to read this, I would bookmark this. This is a very good article. Once again, a lot of us, we go and we get our diplomas, we get our education, we go and get our careers, but it doesn't stop there. There are other things that you have to know as your life progresses on through its different stages. This is in the description box. This is the piece that I read. This is from my own blogging platform. This talks about different kinds of insurances. This is below, if I can find it, in the description box as well, breaking it down, the insurance coverage you need for each stage of your life. That's in the description box. Please consider, she says, I have a great guest for you, Dr. Dunbar. He is a YouTuber. Okay, we'll talk offline. Thank you for that. A major part of YouTube is collaboration. Please consider joining the Big Words LLC Newsletter. In addition to being a YouTube content creator, I'm also a writer with 2 written blogs, well, 2 print blogs, and a book project that I'm trying to finish up and publish, a 2-parter. You'll read about that in the newsletter. There's a 2-paragraph greeting, and there's a subscription button at the bottom. Thank you to everyone who has signed up thus far. I'm always looking for more names. I'm about to send the second one out, probably tomorrow or Friday. So please sign up. That would be very, very much appreciated. Let's see. My book project is called The Engineers, a Western New York Basketball Story. This is my baby. This is what I've been toiling over the last, well, I don't tell you how long it's taken, but it's taken a while. So there's a page there on my second blog. There's a description of the book. That's one of the uniforms that I wore at Hutch Tech High School in Buffalo, the maroon and gold, the Engineers. There's me on Inauguration Day. I was in the woods in Maryland on a photo shoot when everyone else was watching President Biden and Vice President Harris get sworn in. Below that, there's a description of the book. And there are 2 parts, part 1 and part 2. That's the main character in the book there, Coach Ken Jones, a true student of the game of basketball. And below that are the multitude of promotional pieces I've created for the book via both print and video. And right now I'm still pushing out promotional pieces, but this will all be updated as the content comes out. So this is at the bottom of that page. Some of the videos are on this channel. Some are on my sports channel. At the bottom, these are all print interviews. At the bottom, there is a comment section there. So you can leave a comment saying, Dr. Dunbar, this looks cool. I can't wait till you publish it. You could say, Dr. Dunbar, this doesn't look like it's any good. This isn't going to work. You could say, Dr. Dunbar, I want my signed copy when it's done. So that's my book project, The Engineers, a Western New York Basketball Story. Alonzo says, thanks again for considering me, Dr. Dunbar. No problem, Alonzo. You're adding a lot of value here. And if there's anything I can do to help you get more business and your messaging out, I want to do that because you're doing something positive and you're adding a lot of value. The link to the newsletter is here. She just said drop it in the link. This is drop it in the chat. This is also below in the description box below. But here's the link to the newsletter. And then with that, if you're watching on the playback, please like, share, and subscribe. My Cash App and PayPal are below in the description box. But you can also leave a super thanks now as well if you see fit and if you thought this was worth contributing something to. You can leave a super thanks. All right, everyone, stay safe out there. Please look out for more. I have more book excerpts, more voiceovers, and I'm almost done with my Black History interview with Mother Eva Doyle. It's about an hour long, so it's taken a while. But there's more stuff on the way. Thank you for the support. Everyone stay safe out there. And as always, remember that your attitude determines your altitude. Take care, and I will talk to you the next time. Bye-bye.